Hey everyone, Daniel here. If you're into crypto, you've probably wondered, are new regulations going to kill crypto or will they actually save it? Today, we're diving into everything investors absolutely must know about crypto regulations. Because let's be honest, the rules are changing fast, and one unexpected regulation could completely change the game for your portfolio. Think about this. Crypto was born as a rebellious idea, money outside government control. But lately, governments around the world have decided they're not just sitting on the sidelines anymore. They're stepping onto the field with a whole new playbook. And the big question right now is, are these rules going to make crypto safer? Or are they secretly designed to control it entirely? Let's start with something surprising. Did you know one of the biggest regulation fears isn't actually bans, but taxes? That's right. Crypto taxes could soon become stricter, clearer, and way more enforced. Imagine finally seeing crypto treated just like stocks or property, tracked, taxed, and reported. On one hand, it could legitimize crypto overnight. But here's the twist. It could also mean fewer profits for small investors like you and me. And there's something even more shocking about this tax crackdown that most people aren't aware of yet. Stick around, because we'll unpack exactly why it could be a hidden disaster for certain crypto holders in just a moment. But before we tackle that, let's talk transparency. Regulators are pushing hard to remove crypto's biggest feature, anonymity. Soon, many crypto exchanges might demand a full ID check, just like your bank does today. You might think, great, more safety. But here's what they aren't telling you. This crackdown on privacy might actually push crypto investors toward even riskier alternatives. Imagine a wave of new investors suddenly moving off regulated exchanges into risky, decentralized platforms that governments simply can't control. Could this well-meaning transparency move backfire spectacularly? It's a scary thought, and we'll dive deeper into exactly how that scenario could unfold shortly. Now let's jump into a question that's probably burning in your mind right now. What about outright bans? Countries like China have already made it clear they don't want crypto around. And while major Western governments aren't banning crypto outright, they're imposing strict rules that could feel like a soft ban. The US, the UK, and EU regulators are all proposing major restrictions. We're talking limits on trading, banning certain types of crypto assets, and massive fines for exchanges that don't comply. But here's the kicker. Some experts think these tighter controls might actually boost crypto adoption. That sounds crazy, right? Well, later on, I'll reveal exactly how this paradoxical outcome could unfold. But first, let's zoom out and look at the big picture. Remember when I mentioned crypto taxes earlier? Well, here's something most investors completely overlook. If taxes become fully enforced globally, crypto whales might be forced into a massive sell-off to cover their bills. Imagine billions of dollars worth of crypto suddenly dumped onto the market all at once. Prices could plummet overnight, wiping out billions in investor wealth in a flash. Could this tax enforcement scenario really trigger a crypto crash nobody sees coming? Well, the answer is way more complicated and much scarier than you might expect. At this point, you're probably asking yourself, is there any upside to all this regulation? Absolutely. While some investors fear regulations, savvy investors see a golden opportunity. Clear regulations could finally open the doors for institutional money. Think about it. Hedge funds, retirement funds, massive banks, all waiting to safely invest billions into crypto once the rules are clear. But here's something crucial. Only a select few cryptos are going to benefit from this influx of cash. How can you make sure your portfolio is ready? Which cryptos stand to gain the most? And which could vanish overnight? Stay tuned, because I'm going to reveal exactly which cryptocurrencies are poised to explode in value once institutional money starts pouring in. Trust me, you don't want to miss this. Now, let's quickly talk about stablecoins, like Tether and USDC. Governments are especially nervous about these, and stricter rules are definitely coming. Why? Because stablecoins could directly threaten traditional currencies like the dollar and euro. Regulators are already designing new rules that could totally reshape the stablecoin landscape. And this could mean that some stablecoins you trust today might not survive tomorrow. So, which stablecoins are most at risk? And what does this mean for investors holding these coins right now? It's crucial information that could save your crypto savings. Speaking of savings, here's another twist you didn't see coming. Could regulations actually trigger a surge in crypto scams? Sounds impossible, right? But think about it. Stricter rules might push scammers toward unregulated platforms, creating even more traps for new investors. And guess what? We'll explore exactly how to spot these hidden dangers before they target your investments. So, regulations, are they friend or foe? Let's find out. Now let's talk about another major regulation shift that could drastically reshape the crypto landscape overnight. Regulators worldwide are starting to focus heavily on environmental impacts. Proof-of-work cryptocurrencies like Bitcoin consume huge amounts of electricity. And with governments pushing green policies harder than ever, could this spell trouble for Bitcoin? Some countries might impose harsh restrictions on energy-intensive mining, potentially shifting market dominance toward eco-friendly coins. But here's the real question. Are eco-friendly cryptos like Ethereum truly safe? Or is there another hidden regulatory risk investors aren't seeing yet? Here's the surprising twist many investors overlook. Even Ethereum, after its transition to proof of stake, isn't completely off the regulatory hook. Regulators might soon classify staking as a form of interest-bearing investment, similar to how banks pay interest on savings accounts. And guess what? This could bring an entirely new set of financial regulations crashing down on Ethereum holders. Could staking income soon become heavily taxed or restricted? Imagine millions of Ethereum investors suddenly facing complex reporting rules or unexpected tax bills overnight. This scenario is more realistic than you might think, and understanding this now could save you from major headaches down the road. But let's flip the script again, because there's also an upside you probably didn't consider. With clearer regulations, institutional investors might finally gain enough confidence to pour massive amounts of money into crypto. Think about it. Pension funds, big banks, insurance companies, they've mostly stayed on the sidelines. But what if crypto regulations become so clear and safe that these financial giants start investing billions? It's not just possible, it's highly probable. And here's exactly why this could trigger an unprecedented bull market, potentially sending crypto valuations soaring like never before. The catch? Only certain cryptos will benefit from this massive institutional wave. Do you hold any of them in your portfolio right now? So, let's quickly recap. We've seen how taxes could trigger whale sell-offs, how transparency rules might backfire, and how institutional money could reshape crypto markets. But there's still another overlooked factor investors need to know: decentralized finance, or DeFi. Right now, DeFi is crypto's Wild West, a completely unregulated space promising huge returns but carrying massive risks. Regulators are already planning major crackdowns here, targeting DeFi lending, staking, and yield farming platforms. But here's the kicker. Could regulating DeFi actually make it safer and even more attractive to mainstream investors? Or could harsh regulations completely crush this promising sector overnight? This hidden outcome could drastically affect your crypto strategy, so you need to be prepared. Before we wrap up, there's one more crucial piece to this puzzle: privacy coins. Cryptocurrencies like Monero and Zcash, designed specifically to keep transactions anonymous, are now directly in regulators' crosshairs. Countries worldwide are discussing outright bans, claiming these coins facilitate illegal activity. But could banning privacy coins actually drive demand underground, making them even more valuable on black markets? This paradoxical scenario is not only possible, it might already be unfolding behind the scenes. Could privacy coins become the most risky yet potentially rewarding crypto investment soon? And if you're holding them now, what's your next move? The bottom line is clear. Crypto regulations are coming fast, and their impact on your investments could be dramatic. Whether you view them as a threat or an opportunity depends entirely on how prepared you are. So here's what you absolutely must do next. Closely monitor regulatory news. Carefully adjust your portfolio toward coins most likely to benefit, and always stay informed. After all, in the crypto world, knowledge isn't just power, it's profit. Thanks for watching, and I'll see you in the next video.